Yep.
Great.
I'll send it to you later when we're done.
Okay. All right. Sorry about that, guys. Welcome to the weekly meeting. 9/7. I wanted to talk about market structure because of my conversations with people throughout the week. Um, many people are confused with structure. It's probably the most difficult part about trading. Um, but once you start understanding structure, uh, sometimes we still get lost on which structure is important to us or what structure should be important to us, according to what you're trading, right? Um, so if you're a short-term trader, intraday or scalper, you just need to use, um, you know, those specific time frames. If you're a day trader, then you need to use other time frames. If you're a swing trader, you need to use different time frames. And if you are a position trader, you need to use different time frames. Um, and one would be your setup position, like your setup time frame, and then you can drop two time frames down for your entry, and then the middle time frame will be kind of your guide. Maybe if you want to add more positions or what have you. I think once you kind of figure that part out, your success rate goes up. And I'm not saying you won't lose trades because you'll still lose trades, but your success rate will climb, and you know you'll find yourself on the right side of the trade more often than not. Even if you enter a little bit early or a little bit late, the trade, because you're trading the direction of the market, will eventually correct itself. So if you don't over leverage, a lot of times you can find yourself in a good position because you're trading uh, with the flow of the market on that particular time frame. Now, if you are a scalper or something on the lower time frames, then probably not. I mean, it's easier to get caught up in those situations. Maybe those moves happen a lot faster. But if you're a swing trader, or a position trader, if you can pick up one of those positions, then chances are they will correct themselves for you as long as you're on the right side of the move. All right, so I'm going to go ahead and play this video from Jade Cap, and he can go ahead and elaborate.
Make it work in real time. The reality is that market structure can be simple if you have the right context, but this is where so many get it wrong. Reading market structure properly is all about understanding the data. So in this video, I'm going to simplify it for you so you know exactly what to do when you sit down at the charts. If you're interested in how I use market structure as part of a full strategy, make sure you check out my free trading framework PDF. I'll leave a link in the description. So without wasting too much time, grab your notebooks and let's dive into the video. So the first thing that we're going to talk about when it comes to market structure is going to be time frame selection. Now you're probably going to wonder, Kyle, how come we're talking about time frame and not market structure? Well, we have to understand what a chart is. We sit down in front of the charts is representing time and is representing price. So when we are looking at a specific time frame, we have to understand what is going to constitute our long-term highs and lows, our intermediate-term highs and lows, or our short-term highs and lows. So just say, for example, we are a day trader, right? We might use our 1 hour as our long-term high or low, our 15-minute as our intermediate-term high or low, and a 5 minute as a short-term high or low. And you're going to understand what I'm talking about when we get into the chart examples. So when it comes to the time frame selection and trade ideas, we really only want to use the highest to middle time frames for our trade ideas, market structure shifts, and trade management. And this is where I see a lot of traders get it wrong, is they place a trade on the 1 hour and then they start dropping down to lower and lower time frames. And now all of a sudden they're losing confidence in their trades because they might see a market structure shift, or they might see things that are jumping out to them that kind of go against that middle to highest time frame idea. And this is where you're going to solve a lot of your headaches, is when it comes to the lowest time frames. We are only using that for execution in sync with our ideas that are coming from the middle to highest time frames. So just as an example, if I am a short-term trader and my highest time frame is a daily chart or middle time frame is a 1 hour chart, then I'm really only using a 15-minute or a 5-minute to get in sync with the daily or the 1 hour. And then once I execute on that 5-minute or 15-minute time frame, I will use the 1 hour or the daily to manage that trade. Okay, so really you're using the lowest time frame just to get in sync with the trade idea. If I see a market structure shift on the lowest time frame on a 5-minute or 15-minute, but it hasn't shifted on the 1 hour or the daily, then the trade is still valid. Okay, so understanding the time frames that you're operating in is so important. And here's a trick that I would recommend. If you are finding yourself flipping between all these different time frames, what you really need to do is dial down, remove the time frames that you're not going to use. So if you're a day trader, remove any time frame that's not a 1 hour, 15-minute, or 5-minute, because it doesn't relate to you. You don't need a daily chart. You don't need a 5-second chart. We have to just simplify the data that we're looking at, because when we start getting into the examples, you're going to see exactly what I mean. When you start dialing down, you're going to get more and more information, and sometimes that information will cause analysis paralysis. So next up is going to be understanding a swing point. And now what constitutes a swing point? So for a bullish swing point, we have a low, a lower low, and then a higher low. So based on this middle candle, right, we have a higher low on either side of it. So this constitutes a bullish swing point. And when it comes to a bearish swing point, we have a high, a higher high, and a lower high. So we have lower highs on either side of this candle. This is a 3-bar swing pattern. Now, before we start getting into the charts, I kind of want you guys to understand that let's pretend that these are daily candles. Even though that we have 3 candles basically that's creating the swing point, where we have 2 intermediate term lows when we drop down on a lower time frame, right? Going down, this will create the low, right? And then maybe we're going to have a market structure shift this way, creating another intermediate term low before we get that run higher. So really, when we're dropping down, we're just getting more data from these candles. Because if you split this up, right, we have 72 hours, right, within 3 candles. But if we drop down into an hourly chart, now we have 72 hourly candles that we use. And there might be market structure within market structure. So making sure not to get lost within the data is going to be so important to you understanding market structure and understanding the time frames that you're operating on. That is the biggest key to understanding market structure. If you get lost in the time frames that you're operating in, you're going to see things that go against your trade idea. You're going to get extremely confused, and you're not going to understand how to hold trades for a specific level or target, or how to manage your trade because you're trailing your stops up too quickly. And it really causes a ton of bad habits that we really want to try and avoid. So we want to try and simplify things by reducing the amount of data that we're trying to analyze. So when it comes to market structure, very simply, bullish market structure will create higher lows and higher highs as we're going up. So we have low, high, higher low, higher high, higher low, and vice versa. For bearish market structure, we have a high, low, lower high, lower low, lower high, lower low. All right, so this is the basics of market structure. It should not be very difficult to understand, but when we get into the charts, I'm going to walk you guys through where most people trip up. All right, so let's dive into the charts. Okay, so here we're going to analyze the daily chart on the NASDAQ. Now you can notice that I've only selected the most prevalent swing points here. Now what constitutes the swing point, right? We have, again, lower highs on either side of this candle, that's a swing high, and higher lows on either side of this candle, swing low, lower highs on either side of this candle, higher lows on either side of this candle, right, et cetera, et cetera. And I've only chosen these swing points. Yes, there are more in here, but these are the major swing points that I'm looking at as my long-term highs and lows. Okay, so we can see very clearly that these are bullish and bearish impulse legs, higher and lower, as this market is trending lower. Now, I want you guys to take a look at this price action, and based on us starting July 24th, right, where is the first indication that there is a bullish market structure shift? And I'll give you guys some time to just take a look at this, okay? I don't see a bullish market structure shift until all the way up here, okay? So this is going to be our daily market structure shift. And this is going to be important when we drop down into lower time frame. Now, next, where is our bearish market structure shift? Let's say if we had this daily market structure shift higher, where's our next bearish market structure shift? We don't get one until this old low is broken over here. Okay, because none of this is a swing low. We need a 3 candle pattern where we have a low, lower low, higher low. So we don't get a market structure shift until over here. Now keep this in mind because this is our long-term analysis. This is our daily time frame, all right? But let's drop down into an hourly now. So now we're looking at that same fractal of price and we are just zooming in on a 1 hour. And then you could see that we have additional data to work with. So although we haven't gotten a market structure shift on the daily time frame, if we zoom in on our 1 hour time frame, things become a lot more clear. So we have this swing point being taken out. We have this swing point being taken out. We have this swing point being taken out, and on and on. So you can see how dialing in and zooming into some of this data will give us additional information if we're trying to operate on a lower time frame. If your execution time frame or your middle time frame is only based on a daily chart, right? We are not getting a setup for roughly a whole week because we have to wait for a daily market structure shift. So we're not going to get that market structure shift until we take out this high back here, all right? And then we're going to get a retrace because on the daily time frame, none of this was a swing point. So we never broke a swing low in here. So even though we got a massive retrace here, the market was still poised to go higher. So you can see how using the lower time frame will possibly give us more opportunities. And if you go down another time frame, you might even get more opportunities. So understanding where you are in the grand scheme of things and what your higher time frame is, because if you're using a 1 hour chart as your higher time frame, you might be seeing these as your long-term highs and lows. Okay, these might be your long-term highs and lows because they're more pronounced. You can see the market structure more clearly on a lower time frame, where you might not see that on a higher time frame. Is it a market structure shift? That really depends on the time frame that you're trying to analyze. Now let's scroll over and analyze this market structure shift over here. On a daily time frame, we didn't get a daily market structure shift until we took out that old daily swing point. So this is our daily swing point right here. Were there other market structure shifts bearishly previously? Yes, there were. So if we're analyzing data on the 1 hour, right, this will be considered a market structure shift. This would also be considered a market structure shift, or this one down here would be considered a market structure shift, right? And if we were looking at this market structure from our 1 hour, right, we have different data that we're looking at. We have bullish market structure in here as well. All right, so when we sit down in front of the charts, we really have to understand what type of trader we are and how frequently do we want to trade. Because as you can see, the lower and lower you go on your time frames, the more activity you might see and the more data you might have to analyze. And that might not always be a good thing. So if you're struggling with market structure, you have to understand the time frames that you're operating on. Because if you're lost, you really have to take a step back and realize that we're just looking at data. When we're looking at a daily candle, there might be a lot of data inside of that daily candle, right? It's basically taking a magnifying glass to that market structure. And you're going to obviously see different data because you're analyzing 24 candles out of that specific day. Because with a daily candle, you're only getting one open, low, high, and close. Whereas if you're studying an hourly chart, you're getting 24 open, highs, lows, and closes. All right, so the next time you sit down in front of the charts, just be very mindful of the time frames that you're selecting, because a market structure shift on the lower time frame might not mean a market structure shift on the higher time frame. And understanding what type of trader you are is extremely, extremely important. When we're trading on a lower time frame, our average hold times might go down, and if we're trading on a higher time frame, our average hold times will be higher. So you have to understand the time frames that we're selecting because they have a major impact on how long you might have to hold the trade, on how you're executing. So it has a really big impact on trade management. And don't just use the lowest time frame to manage your trades, because a lot of times, right, like as I had shown, if you're trading a daily time frame, but you're managing the trade based on the lower time frame, you might get stopped out a whole lot, when in reality, this daily structure, we might not ever take out a swing low. So before you move that stop loss up, we need to see a daily swing point be created. Let's say if you're trading the hourly chart, I'm not going to move my stop loss up based on a 5-minute swing point creation. Okay, so when I'm managing a 1 hour trade, I'm going to manage it if a 1 hour swing point's created. And this is where maybe a lot of you guys are messing up, where you're adjusting your stops based on a lower time frame, but it's throwing you off because your premise for the trade is created on the higher time frame, but now you're trying to micromanage it, and you need to give your trades room to breathe before they reach their final target. All right, guys, so just to quickly summarize things, make sure we're focusing on time frame selection. So understanding what type of trader you are, that way you're not getting lost with too much data. Using the highest to middle time frame for trade ideas, market structure shifts, and trade management, and using the lowest time frame for execution only. Okay, so if we are on our lowest time frame thinking that we have market structure shifts, like I've shown you, the higher time frame where our trade idea is coming from might not have that market structure shift. So if you're lost, I recommend going up time frames and not down, which most people do. And then finally, understanding valid swing points. Is the market making higher highs, higher lows, or lower highs and lower lows? All right, I hope you guys enjoyed this video. I try to keep it simple so you're not overwhelmed. I think market structure should be simple to understand, but we overcomplicate things because we overload ourselves with too much data. But if you watch these videos and are still a struggling trader and want to learn directly with me, make sure you check out the link in the description. Also, don't forget to like, comment, and subscribe, and I'll see you guys in the next video.
Alrighty. Do we have any questions? Does everybody know what they trading this week?
No, not yet.
Yeah, I
said
don't
not
want to
yet.
start an argument, but I kind of like GA.
You say you don't want to start an argument.
Yeah, but I like GA.
Why would that start an argument?
I know how you and Adrian be going that over GA, but that was just my preference.
Oh, because of because Andrew.
Yeah.
Oh no, man.
Thank you, sir. The best pair in the world, bro.
I like GA. I like US 30 better, but I like GA.
Everybody should be trading GA, bro. Everybody.
Everybody should be traded.
I'm telling you, bro. This pair, nah, man.
It has a bullish OB, but I think it's gonna push up before it sells. We took out this high. There's still like a imbalance here. Are you looking to buy it or sell it?
So I was looking to sell it.
What time frame are you gonna use for the shift?
I had marked up my golden zone, but at the same time, I was looking for it to take the top side liquidity and everything, still show me structure.
I think that the imbalance on the 1 hour, this is the imbalance closure, and on the 4 hour, the imbalance closure. I mean, we're very close to closing out this imbalance in the 4 hour. So I don't know where you're looking at it, but if I feel from here to this low, I think this is about the 65% retracement, and then the 78 is up here. So whatever you're looking at, just make sure that you see your chalk before you sell it.
Right.
I like the setup too. I like EC better than this stuff, but I like this setup. I like I want to see this push a little bit higher too. But I think they're similar. I'm gonna see a pullback on this one again, and then another sell. But yeah, I like all of these I like all of these setups. I think there's a lot for everybody. Whatever you want to trade. I think we had a lot of order blocks that each put out. We had a lot of weeklies, we had a lot of 2 weeks. You know, I entered a short for GA on Friday. I mean GA for GU on Friday. And you know, I'm liking that setup. I think we'll keep pushing down. So you know, I just think we you know, whatever you're looking at, as long as it makes sense to you, just make sure you get your shift, your structure shift. Because I entered this trade, you know, based on the 2 month chart. I know it needs to sell down, but I think that I can at least sell it to this low right here. And it caved in nicely on Friday after NFP. So I think it will be a matter of patience. And you know, I know a lot of people don't trade like this, but you know, this was my setup. You know, the push down, breaking this low, and it traded back into the imbalance on these lower time frames. If you trade like that, then you kind of saw it the same way I did. I don't care really about the head and shoulders, but it was a head and shoulders. We pushed down, we broke these lows, we traded back up. And the news pushed it way up here, and I just caught it on the sell. So I think there are several great setups that we can use. I think that you know, if we believe that the interest rates will be lower, I think we can trade a lot of those dollar pair down. You know, this will probably be the last opportunity to trade it down for a minute before it all takes off, because you know, I think the Fed is going to lower the rates, which is going to kill the dollar. I mean, the Dixie is already, you know, it already kissed the bottom, it kissed the floor. So I think the Dixie will probably buy back up. You know, I would look for it to run these you know, this trend liquidity. I don't know if it'll make it to this level or not, but I would look for it to push up pretty good before the Fed kills the dollar here later on in the month. I think that meeting is on the 17th. So you know, we'll see. I look at this as a liquidity grab that push down, and then you know, I think that the dollar is going to push up this next week, and you know, at least push to this level, but probably we'll reach 103, 103.50 to run the liquidity here before it comes crashing down in about 10 days. You guys have any comments, any questions, any input? The NASDAQ sold off like crazy too, but I didn't really like the NASDAQ setup, you know, compared to the US 30. But you know, it's still doing the same thing. I think they're all just gonna give up the goods until it's time to buy, you know. So if I'm looking at this, you know, this was a swing low, that was a swing high, this was a swing low, that was a swing high. So this is just a pullback, I would think. If I measure from the lower wick to this wick, I would say this is a pullback. I think we're going to take out these equal lows down here, which makes perfect sense. This will bring us close to the 78. I do believe there's a case to have a 78% pullback. There's an imbalance right there too. So, you know, it just makes sense. And I was fortunate enough to get 2 great entries on this US 30. And if it pulls back again, I'll get 3 great entries. And then that will allow me to slingshot into the buy from this low, and then I don't have to look back. So even if you're not in the sale, if you believe, like I believe, that we're going bullish and we're going to be bullish for like months, then your buy position or your buy entry is probably going to be right down around here, and maybe it'll happen on that, when they lower the interest rates, the interest rate decision around the 17th. I think that's when they do it. But if you believe like that, then you'll want to pay attention to whatever index you're interested in buying, right? Because this move down is likely a pullback in preparation to go bullish. And what I think is this bull run will the bullish movement will last, as long as this bull run lasts. I think we're seeing the same thing on a lot of the crypto. I think the last time I looked at Bitcoin, it was around 50. Yeah, 52. So I think we're seeing the same thing. And there was an imbalance down around in the 40s. I don't know if we'll actually get down there. Maybe it was on a daily chart. I saw it. Yeah, there's daily imbalance around 47. So I do think we will touch that. There's more imbalance around 44. I don't think we'll get down to the 30s, but that's just me. If you're trading it down, then I would definitely look at it. Gigi, did you trade Bitcoin?
Yep, I traded Bitcoin and gold.
Yeah, I knew you was a gold. Yeah, I think gold is doing the same thing too.
Yep, they do the same things.
Yeah, they pulling back. And I think it's logical, because I do believe this is going to be a crazy run.
Mm-hmm.
I think gold has imbalances down here. I don't know if we'll reach those. I think we will reach definitely around 2,400.
Yeah. Yep.
So
Still bullish, but it's definitely finally pulling back what we was looking for.
exactly. And I think if we used the swing point, which is probably this low right here, then we could. This is the 78. So I definitely think we're coming to 2,400. That's what I would bet 2,400 is about the level that we'll pull back to. So if you're a gold trader, you don't trust is pulling back, then you can wait for it to pull back around. I would look to be long around 2,400-ish, I would think. But it's a pretty simple read, in my opinion, at this point. Like, just the stuff is pulling back for a reason, and I think fundamentally it's a decent reason. Any other questions? I think there are some great opportunities. Stick to your guns. Trade what you see. Any questions? No questions. All right, guys, go watch Longhorn football.
Thanks, Todd.
Alrighty, thank you for recording for me, Selena. All right then, Andrew.
Thank you.
All right, y'all have a good one.
You too. Bye.